Hi, this is Michael Rony Mullick, and you're watching the Post Market Show. Today's market, it was, as you can read from the title, first we had a gap down opening because the global markets were negative, US markets falling significantly, and obviously we were about to open with a gap down, which was already indicated by Gift Nifty, and that is exactly what has happened. Then markets fell further, and then there were some recovery in the second half, especially in Nifty. So that was what has happened, and again FIIs have continued to sell heavily today. Let's look into the charts and see what has happened. Nifty, as you can see, opening with a gap down, then immediately falling further with a big red candle. So we did talk about 19447 as an important level of support. Markets opened just above that. Immediately it was broken in the morning itself. Then there was a pullback again. There was selling from those levels, and where did it take? The low was at 19333, and we marked 19334 as a support, and you can see the importance of supports and resistances once more, proving they do work because a lot of people follow them. So it's like a self-fulfilling prophecy happening once again. And then markets shot up, and where did it end? Again at 19446, which we had marked. So on a closing basis, Nifty is down about 92 points, 0.47% down. Coming to Bank Nifty, it was an expiry day for Bank Nifty. It is a Wednesday. You can see a good fall happening, similar to Nifty, but then we did not see that fantastic recovery happening in Bank Nifty, where it closes at where it opened. That did not happen, but there was some kind of recovery, but still markets closed below 44,000. So 0.98% down is Bank Nifty. So this is the situation. Everything is down today. Mid caps are down significantly. So this is not good, because mid caps again, it should have moved up from here, but it's consolidating. As long as this 13th of September low is not broken, we are safe, I believe. 1.38% down. Mid caps, small caps also down today by 1.13%. And sector wise, most of the sectors, as you can understand, ended in the red, and only two sectors doing well. One is FMCG, 0.22% down, and IT recovered from its lows, 0.3% up. See, there's only two sectors which have done well, but you can see it moved up very, very slightly. It was PSU banks which came under heavy selling pressure. Again, the all-time high level was broken, and looks like people were waiting for it. Once that was hit, immediately people press the sell button. It is the top loser today, 2.8% down, PSU banks. So from these levels, it's very easy. Just wait for another breakout from this level, a pullback, and then if the all-time high is broken, then we will have a further rally in the upward direction. So that is when you can enter the long positions. Once again, this is a classical technical analysis, so that is expected. Let's look into the other sectors. We have auto falling significantly, 1.3% down. Pharma down 1.4%, media down 1.7%, metals down 1.06%. Now metals, we were seeing some kind of bearishness in the metals yesterday, so it was evident that metals would be falling today. What else? Reality is down 1.7%. So most of the stocks are down about 1% plus today. So it was again a bearish day, but it was IT which helped support the market, and HDFC Bank more importantly. So HDFC Bank, as you can see it, let's look into the charts once and see what has happened. HDFC Bank did move really well today. So HDFC Bank, yeah, here it is. It has it broke 1500 levels, and from the lows it shot up, as you can see today. That was a good recovery from the lows, and also it was a news based rally as well, because you can see HDFC Bank, the loans are up 4.9% sequentially, and also deposits are up 29.9%, and also its gross advances surged 57.7% year on year. So all these news came, and also it was at a near important support. So this helped boost the sentiments of the banking sector, especially the private banks. So still, it was Axis Bank which fell today by almost 4.37%, therefore nullifying this good news from HDFC Bank. But good to see HDFC Bank not being in the top draggers of Nifty, which has been the case on a regular basis for weeks on end. So that is a change today, and HDFC Bank is in the top mover of Nifty 50. So HDFC Bank 1.4 percentage up, then Infosys, Hindustan Unilever, Adani Enterprises, TCS. So these are the top gainers, but again it was the ranking stocks like Axis Bank. I told you it fell the most today, dragged Nifty by 28.76 percentage down. ICICI Bank down by 1.09 percentage, State Bank of India down by 2.77 percentage, and rest are there. And you can see most of Nifty 50 stocks have ended in the red today. On the economic front, we don't have much data today. Only the services PMI data of US has come out at 53.6, in line with expectation, and it is greater than 50, so that is all good, I believe. And I think US markets will be doing well, and it was crashing down yesterday. So what's that tomorrow in terms of economic data? We have the services and PMI data for India tomorrow. Then what else is there? Yes, if there's anything important. No, nothing much is there. On Friday we do the most important data, non-farm payrolls and unemployment rate in the US. That is what everyone is waiting for. Now let's look into US markets, and US markets were the main problem yesterday. As you have seen that US markets were falling. US VIX was touching above 20, so things are looking all right now. US markets are recovering, did not break yesterday's low. It's in positive territory right now. S&P 500 at 0.48 percentage, Dow Jones at 0.11 percentage, again a doji candle forming right now. Nasdaq had a meaningful recovery, 1.13 percentage, and still it did break yesterday's low, but it is now up from the lower levels, so that should slightly raise the sentiments worldwide. UK markets are down 0.6 percentage, but we have French markets are absolutely flat. German markets also recovering from its lows, 0.1 percentage up. Asian markets, let's look at those. Asian markets are all in the red, with Japanese market falling heavily, 2.28 percentage down, major gap down, and markets moving down. This was a bit unexpected, I would say. Japanese markets falling heavily in the last 3 days. As you can see, if you look at the percentage levels, the last 3 days it has fell almost close to 6 percentage. That is not a good thing for an index like the Nikkei. And also Korean markets fell by 2.4 percentage today, so that's there. Asian markets are falling heavily. Chinese markets are also down by 0.7 percentage today, and the Hong Kong markets are down by 0.78 percentage. Asian markets are clearly not doing so well in this kind of situation. Let's hope with US markets recovering and everything slowly turning green, let's hope the Asian markets recover tomorrow. And talking about that, US bond yield has cooled off. It's at 1.3 percentage down right now, and that has closed. It was above 5 percentage once, I believe. Let's look at the highs, and it went as close as 4.884. So yeah, US bond cooling off, and that is giving some kind of bullishness to the market in the US. US VIX is also down 4.4 percentage. India VIX not at all rising. In fact, India VIX is down at by 1.12 percentage today. 11.65 is the current levels. Well, this in a market like this, we expect the VIX to rise. That is not at all happening, especially in the Indian markets. Crude oil is crashing by 5 percentage today. It's at 84.92. A shout out to the OMC stocks tomorrow. Those should do well. Oil marketing companies, I mean. So keep an eye out for those. Okay. Crude oil prices coming down again is a good thing for the markets. Maybe it's time to be slightly bullish. Let's see, looking at the factors. But talking about metals are down. Aluminum is down today, 1.8 percentage down. Rest all the metals are down between 0 and 1 percentage. Gold prices stabilizing around yesterday's levels. No further fall has happened yet in gold, so that is there. Dollar index is also coming down. Good for equity markets. It's at 106.7. Indian rupee has weakened slightly against the dollar, but it's nothing significant. But it has weakened significantly against the euro and pound sterling. It's at 101.1 for the pound, and against euro it's 87.48. So this is the situation right now. And talking about tomorrow's expiry, that is the Nifty's expiry tomorrow. Put call ratio 0.85, a slight improvement, I would say, after yesterday's fall. So since there was a kind of bullish movement in the last half today, so we see some puts have been added into the system, but overall put ratio slight improvement, and you can see puts sold at 19400, 350, 300, so 400 and below puts were sold. And call, if you look at the call strike prices, we see calls still written heavily from 19400 and above levels. So this is the situation. Put call ratio at 0.85, max pin at 19450, but let's see, 9600 has the highest amount of calls. But in a time like this, what we do is basically we talked about this, that below 19500 a closing will indicate it's a sell on rise market, and we will continue to do that and not get into bullish positions at this moment, because it's close below 19500. Let's wait and see if the market recovers tomorrow, and maybe after closing above 19500 we will turn back bullish. But right now it's best not to get into bullish positions. So levels 19334, today's low, then 19233, that is going to be significant, because that is the main low the markets had witnessed in the recent days. So it came down as close to 19225, so yeah, something around that zone. 19220 is a important level to watch out for. Down below we will have problems, obviously, because 19000 is the next support. So looking at everything tomorrow we can expect an up move. GIFT Nifty indicating already around 19478, so expect a good up move. Even if not a good up move, maybe markets will not break the 2 days lows that is expected. Let's see how things turn out. Up above 19447, 19523, 19566, these are the levels to watch out in case of Nifty. Back Nifty 44151 will be acting as a important resistances up above 44500, then 44770, down below 43740 and 43471. 43740, mind you, is a very important support. Last time's markets took a U-turn from here, so though that should be respected, I believe. So this is the situation right now, and looking at everything, tomorrow expected to be a maybe it could be a flat opening or a gap up opening, and then markets can be volatile between a tight range, and slight bullishness can be there in the market is what I expect, looking at the global factors. So that is all from my side. Thank you for watching and have a very good night.